So thanks everybody and good evening. This is Prakash. I represent a company called Centlon. Uh, and today I would be talking about the role the technology plays in AIF, both at early stage and at the mature stage of AIF. And also would be briefly talking about Finet platform that we have for AIF funds. So feel free to ask, stop me in between and ask any questions if you wish to. So when we look at the current scenario in the AIF industry, specifically in India, it is one of the fastest growing investment instruments in India. For past couple of years, the growth has been about 30%. Last year, it was 42% as per SEBI data. And the funds that are committed is expected to grow by double in next 5 years. Out of this, category 1 and category 2 funds cover about 80% of the industry today. And as number of investors are increasing, we are seeing a lot of first-time investors coming into AIF beyond institutions, which used to be the norm earlier. The regulator, that is SEBI, is increasing the compliance requirements. And there are also concerns increasing around the data security, both from the investors' perspective as well as from the investee companies that the AIF holds. And I believe these are going to be very paramount areas, regulation and data security, wherein a lot of technological innovation are going to happen in AIF industry over next few years. While we look at AIF industry, many of you end up investing into tech companies. It could be pure tech companies or companies, edutech, food tech companies or so. But within the industry, the tech adoption has been generally low. And there are multiple reasons for it. One is the team sizes are generally small. The fund houses would have 5 to 8 members or sometimes 10 members when we look at the new funds that start. And you may not have a dedicated tech team to support it. And that's where the easy path is to start working with spreadsheets. And that becomes a dominant tech tool in most of the AIFs in the initial years. While that spreadsheet suffices what you do, we believe there are industry challenges and where the tech can play a critical role. The first thing is the high volume of data that AIFs end up processing. And this is mostly from your deal perspective, the prospective investees who reach out to you day in and day out. And you have a lot of data flowing into your system on your mailboxes, on your drives for all the investee companies, right? And the general ratio is from the point you get an request to the point you actually make a decision for investment, it's generally less than 2%. So 98% of the investing company data would still come in, which you will have to manage, process, and take a decision around it. Consolidating this in a single place and managing the data well, helping you come out with some statistics, analytics out of it, is one area where the technology is going to be playing a role. The other thing that we have observed is inconsistencies in data. Now, because the data comes in over mail, it gets saved on a drive, or a drive folder gets shared with you for processing from the investee companies. And then you summarize it in a separate Excel sheet, Word document, or you move it there. There is a lot of time where there is inconsistency. You have got some MIS reports, but that status is not updated. So somebody is still tracking it, or could be the other way around as well. And that's where you don't have a single source of truth or centralized view of either your deals or of your investments that have happened. This further accumulates to inability to generate real-time reports. The other aspect is in terms of institutional memory and historical data. At times you would have gotten investment request which you would have rejected for certain reasons. Could be the director profile was director or founder profile was not something that you were okay with, or it did not meet your mandate. Few months or few years later, you get another investment request from the same director, but in a different company. If the data is stored centrally, managed centrally, it's easy to deduplicate and figure out what has happened. Has there been some similar request coming in past from the same set of founders or from the same organization? But with all the data scattered in spreadsheets, it's difficult to have a track of it. And sometimes this information, as you grow along, right, another few years down the line after you start your fund, some of this information would become critical for you for taking your decisions and would save a lot of time for you. Bringing in operational efficiency by putting in AI into your decision making, reducing cycle time, like uh, automating the entire investor onboarding piece, right, which used to take weeks, now can be done in minutes. Right? And also, if there are tech platforms, your overall training cost of getting new staff onto it is going to be easier, because uh, if things are scattered, it is difficult to train anybody on. Investor communication, collaboration with stakeholders, that also with centralized information becomes easier. And obviously compliance, regulatory reporting, getting information for it, and your struggle on the last day of the quarter to share the information with your trustees and other stakeholders would actually get reduced if the information is centrally managed. Now, while we talk about all this challenges and how technology can help, selecting a tech partner or a tech platform is equally critical. And the due diligence around it may not be as extensive or as intense as you do it for while doing due diligence for your investee companies, but still it's going to be a long-term partnership. So you will have to do enough and more due diligence around what you are getting into. The first thing that you need to look at is whether your tech partner understands the domain. Do they talk your language? Do they understand your business? Because you will find a lot of technology companies who are willing to come and do projects for you, build some systems for you, but if they don't understand your business, then they may not be able to help you in improving your efficiency, helping you set up best practices, industry practices in place. The platform that you select needs to be flexible enough, because you may want to change your process flows, you may want to change the attributes that you capture while doing due diligences, or you may want to capture more attributes from your investors going forward. So the platform has to be flexible enough where you can customize it, configure it, and you should be able to bring those changes at a much faster pace in the system. It has to be modular enough, because there could be different aspects, right? And I will talk about it as we go along in terms of how different set of modules can cover the entire gamut of things that an AIF would require. And the platforms have to be modular. You can pick and choose based upon your requirement and then slowly integrate it to give you the end-to-end benefits out of it. I would request each of the founders or the fund managers to invest enough time while understanding the platform. If you are selecting a platform, document all your expectations that you have from platform, maybe, and then start ticking it. So you may end up at 50%, 60%, not all will be met, but you know what you have got, what you are not getting when you sign up for a platform. Obviously, the tech team has to be strong from your partner, and look at it from a long-term view perspective. And I'll try to give you an example why I'm saying so. So while you start the fund initially, you may look at some open source or some free CRM and say, okay, I'll manage my investors here, I'll manage my deal here, and instead of capturing it in a spreadsheet, and you will start capturing some data. But over a period of time, you'll realize that this is not working out. If your investor management does not just mean capturing some investor data and having a Kanban to move it across stages, but then there are more things to be done. Or having a deal managed does not just mean capturing few information around deal, but you may want to capture a lot more information, have some automation, capture due diligence notes, capture approval details, have all these things set up. Now, after a couple of years, if you want to then upgrade, you will again have to get into migrate the data, and that becomes a long haul. And as you grow, your needs are going to increase. So pick up a tech platform that can actually take you from now to, let's say, another 5 years, 10 years vision, because that's at least going to be the life of the fund. You don't need to keep on switching between it. I'm happy to take up any questions at this point of time. And if there are any, otherwise I can then do some deep dive into what Finet has to offer to all of you. Yeah. So if there are no questions, let me get into Finet. So Finet is a flagship product, specifically focused on AIF. It's a cloud-native solution. It covers the entire life cycle of AIFs, and I'll show it to you in next few slides. We bring in automation into decision making. We help you monitor your portfolio, your investments, and having a very granular access control in terms of data within the organization. We also help you to an extent in terms of ensuring that the data is there for your regulatory reporting and you can derive it from the system. It has 6 key modules. Raise, which is the investor side CRM, it helps you manage the entire investor life cycle. Detail onboarding, which helps you seamlessly detail onboard the investor. Originate is to manage your deal pipeline. Invest fact helps you in terms of investment accounting, calculating fee structures, helping in terms of distribution, and basically your GL system. Monitor helps you for monitoring your investee companies post your investments are done on a monthly, quarterly basis. Track your covenants, your CACPs, as well as monitor financial and operational matrices that you have agreed while you initiated the investment. In case some of you are doing debt side of investment and they are secured debts, then limits and collateral would help you in terms of managing the collateral. I'm just trying to fit the previous slide back to the AIF business life cycle. So obviously each fund would have different life cycle in terms of number of years and how it would work, but just trying to put in place different aspects of it. So raise would be required during your fundraising, while originate investment limits collateral will come in handy during the life cycle of while identifying the investee companies and making investments. And then again, the next set of portfolios. And we can do both greenfield and brownfield implementations. Brownfield means an existing fund, we can go and start picking up different area aspects of the life cycle and then putting a system in place. Greenfield is something like what all of you would be doing over next few years, where you would be setting up your own fund. And it's modular. You can pick and choose based on the life cycle stage that you are. Getting into doing a little deep dive in each of the models. Detail onboarding, capturing data, and we saw a video in a detailed video presented by Vishwanath and his team right now. So it helps you capture data, KYC checks, AML checks. These are all online. Payment gateway integrations to do penny drop and validate the bank account details. Helps you generate the document, again customized based on the inputs that have been provided. Aadhaar-based e-signing, SMS email integrations for notifications, document uploads that are required, live photo capture so that to ensure KYC is proper. So it takes care of everything that is required. Raise, like I mentioned, is your workflow for raising capital, your investor management CRM, wherein you can have the entire capture the entire investor conversations, all your meeting notes with the investors, capture the details of the commitments that are there, and also keep on communicating with the investors through the system as and when the investments happen. There are valuations that are done and so forth. Origination is an interesting solution that we have. It helps you manage your entire deal pipeline, just not by capturing data, but also, and just not the data of the company, but also of the directors, level 2, level 3 of it. Your financials get captured. You can use it. You can be do some ratio analysis within the system. It can be used for due diligence and underwriting. We can define the approval metrics within the organization. We can generate investment notes out of it. And we can generate the contract that has to be signed with the investee company. So it allows you to put in your covenants, your CACPs, your terms of investment and everything into it while capturing the data and while due diligence, so that the final contract draft also comes out of the system. Invest fact, like I mentioned, investment accounting helps you capture, calculate your IRR, drawdowns, distributions, and so forth. I'll not get into details of it. Monitor is another interesting solution that we have. While you underwrite an investment, you would have underwritten it based upon a projection, a plan. Now, after investments, you would want to monitor it on a monthly, quarterly basis. Could be in terms of financial data, cash flows, or could be operational data in terms of number of active customers, paying customers, or whatever matrices that you want to monitor. All this information comes to you from the investors today as a part of through emails, and then you have to look at multiple spreadsheets and manage it. Monitor digitalizes this entire process. So you put in your underwriting plan or your baseline plan, you can upload your monthly MISs onto it, and it starts giving you variances and start giving you early indicators out of it. And you can configure what operational and just financial parameters that you want to monitor. Limits and collateral, again, specifically focused if you are doing some debt, and that is secure debt investments. Yeah. So that's briefly about Centlon and Finet. Happy to take up any questions at this point. Okay, so one question is, does your Raise module work as a full-fledged CRM? Can we also track prospects and have a full funnel there? Does it integrate with email like MailChimp? Yes, it does. So it is a full-fledged investor CRM as such, wherein not just like a normal CRM, which would have limited functionality, but it would have certain investment related attributes also that get captured, and you can maintain your fundraising funnel out there. We can initiate emails from it, not only through MailChimp, but through CRM itself, we can initiate some mails, and we can obviously integrate with other emailing tools, email marketing tools there. Does that answer your question? Yeah, thanks. Any other questions? Happy to take it. So each module has a different pricing, and we do pricing in different ways. So we you can buy one module at a time. You can do all modules, and obviously if you do all modules, you get benefit out of it. Our pricing is based on volumes, based upon AUM. We work it out. We are quite flexible around that. So we can help you once, if you have some specific inquiries, we can have one-on-one with you and discuss this. Bhaskar, what all segments does Finet specialize in? Our specialization is in Cat 1, Cat 2, specifically on PEVC firms, real estate fund. We are also doing some enhancements into system for impact fund right now, but that may take few more months for us to do it. Sure. Contact details would be shared as there's a report which is going to be shared with all of you, I think in next couple of days. That will have our contact details. You can obviously visit our website or reach me out on LinkedIn, and then we can connect further.